Hi everybody, in this video we will continue from where we left off. The treatment of revaluation surpluses in property, plant and equipment. This video will show you how to deal with the complexities of calculating the revaluation surplus as far as it pertains to property, plant and equipment. In the paragraphs or in the fact pattern, you had this certain paragraph that read, the company intends to keep the plant and has adopted the revaluation model, accounting for the revaluation on the net replacement value basis. The maximum amount is transferred from the revaluation surplus to the retained earnings on an annual basis. The mechanics of the net replacement value basis, for that first part of the sentence, we will go into detail on it when we do the PPE disclosure note, but the calculation for the amount that we transfer from reval surplus to retained earnings, that is going to be covered in today's video. So as you are aware, in our previous video, we drafted the deferred tax table, as you can see on the screen, but our table did not take into account the movements in the reval surplus. Our table showed us the carrying amount of PPE as it will appear in our balance sheet. The table showed us our tax base as it appears in the taxman's balance sheet. The table shows us our deferred tax asset or liability column that will appear in our balance sheet, but it did not show us our reval surplus. Bear in mind, even though reval surplus sits in OCI as well as your statement of changes in equity, it's important if we have it on one table, it just makes life a hell of a lot easier. So step number one, by looking at this table, first identify when did the revaluation first arise. And as you can see, it arose just before 1 Jan 06. And as you can see on the screen, we revalued our plant by 120,000. As you're aware, whenever you revalue an asset, okay, the revaluation impacts your carrying amount. Thus, each of the subtotals that you see on your screen contains a mix of your depreciated historic cost as well as your reval surplus. Thus, when you depreciate your asset after you've revalued it, you are in effect depreciating a part of the historic cost and you are depreciating a part of the reval surplus. The next step is to identify movements in your carrying amounts that has a reval surplus in them. So let's go through each item line by line. The 120 is a revaluation surplus. From the 420, part of it being the 120 is a reval surplus. From your depreciation of 70, yes, ladies and gentlemen, that does have a portion of your reval surplus sitting in there. We're going to be ignoring the tax base column because whenever revaluation occurs, it does not impact your tax base. Looking at your disposal of 140, the interesting thing is that part of your 140 that was disposed did in fact contain a portion of your reval surplus, so we're going to highlight that as well. Your additions of 200, does that contain a reval surplus within it? And the answer is no. The addition was brought in at cost and it was not revalued, so the 200 will not be highlighted. Your depreciation on your old does contain a part of your reval surplus that you're depreciating, so we highlight it. And your depreciation on the new of 18,000 does not contain any part of reval surplus in it, so we ignore it. Right, so now that we've identified the lines or or the parts of the carrying amount that is impacted by your reval surplus, the next step is to calculate your revaluation surplus balance as well as movements from point to point. So looking at the first line, your carrying amount is 120, meaning your reval surplus is 120, deferred tax on the reval surplus is 36, thus your reval surplus starts off at 84,000, being 120 less 36,000. Thereafter, when we depreciate our plant by 70,000, we then need to calculate how much of that 70,000 contains a revaluation surplus that is being depreciated. To get that, we simply take 84,000 multiplied by 6 months used divided by 36, being your remaining useful life. I have a video on ratio and proportions. If you'd like to visit that video, please do so, if any of the workings on the side don't make sense. Thereafter, from your disposal of 140, what part of that 140 pertains to a reval surplus? To calculate that, you take your subtotal of 70 multiplied by 140 over 350 to give you 28,000. Your new reval surplus subtotal as at 1 July 06 is 42,000. From that 42,000, we then need to work out what portion of that reval surplus then gets depreciated when we depreciate our old plant. To calculate that, we take 42,000 multiplied by 42 over 210. And thus, as at 31 December 06, our revaluation surplus balance is 33,600.